Good afternoon, everybody. Welcome to our COBRA webinar for today. My name is Emma Marseille from IQ Business. I'm going to introduce our panelists today and the topic. We have our presenters, as usual, every second Friday, Singular, which we're very happy to welcome. COBRA is a pro bono initiative started by three businesses: IQ Business, Schindler's Attorneys, and Engaged Business Turnaround, and is fast growing as a consortium of partners to help businesses in distress before they enter or need business rescue. Please feel free to engage with us on the COBRA website, www.cobra.org.za. Today we have Singular on with Lorenzo, Deshnee, and Rohit. Singular is an independent owner-managed strategy and investment consulting firm with a global footprint, a fast-growing management consultancy enabling long-term strategy development and advising its clients on critical investment decisions. For years, clients across Europe, Africa, Russia, Asia, and Latin America have valued working with Singular for its innovative mindset, practical approach, guided and first-hand experience, and execution focus. Wow, the word did not come out there, sorry. The panelists today are Lorenzo. He's a turnaround specialist, serial entrepreneur and investor. Over the years, Lorenzo has co-founded and is the director of the Singular Group and Winterberg Group. Lorenzo holds an MBA in the London Business School and is a member of the YPO of South Africa since 2014. We have guest speaker Deshnee, special guest as mining CEO. Deshnee Naidoo is a chemical engineer who constructed a distinctive career in the mining and metals industry over several commodities, geographies, and in assets at all stages of its life cycle. With over 21 years experience in companies like Vedanta Zinc International, Konkola Copper Mines, and various other Anglo-American, including CFO for their thermal coal division. The third panelist we have is Rohit. Lomas is a regular presenter on COBRA webinars. He's a manager at Singular Group with experience in commercial excellence, operational improvement, and strategy development for African miners. I always look forward to the Singular presentations. They really are insightful. So thank you very much, all of you, for joining. And I'd like to just hand over to Lorenzo.
Super. Thanks, Emma. And a personal thank you to Deshnee for joining us today and for bearing with a few minutes of my introduction and sort of going through what Singular, let's say the Singular point of view as per this week, and then we'll hand over to Deshnee for a view on specifically on the mining sector. So maybe, and thanks Roy for sharing the screen. Maybe if we move to the next page, just a quick reminder on why we do this. So the objective of the Singular Compass is very much one of giving, it's a pro bono effort, and it's part, or we share this also as part of COBRA, which itself, as we heard from Emma, is a pro bono initiative. But the aim is very much one of providing a level-headed, ideally short, practical, and balanced view that should hopefully provide a practical guide for leaders in the country, whether it's business and governmental organizations, in this time of crisis. And in this time where time is scarce and information is absolutely, I mean, one could spend literally the whole week reading the news and being drawn left, right, and center. How do we do this? We typically do this leveraging off the learning from the last crisis that we witnessed and we sort of created learning from, but also from studying how previous crises and pandemics panned out in the past. So said that, the material will be published online via LinkedIn, so you can send me an invitation and you'll receive it if we are a connection on LinkedIn. Personally, I'm particularly thankful to the country and to South Africa for a wonderful 10 years, almost a decade spent in the country, and that's very much the personal motivation that I put behind this effort. Said that, without further ado, let's get into the content. Cool. Typically, the structure is threefold, as usual, as the usual listeners would know by now, or readers would know by now. The first part, which will give a few insights in this particular edition, is about the virus and the healthcare. So it's about very much answering the question, how could the virus and the healthcare situation evolve in the country? The second chapter is about policy and economy. Obviously, the two are intertwined. And here we're trying to answer the question, okay, given the virus and given the healthcare, what could be the economic situation and the economic consequences onto the country's ecosystem? And then the third part, typically we get into business. So getting into business in this particular edition is about mining. And that's why we are pleased to have Deshnee as a guest. And so given that mining is such an important sector for the South African economy and GDP and ecosystem, we look specifically on how SA Mining Inc., let's call it that, can react in this particular environment. Cool. So news for the week, unfortunately, on the health and healthcare situation is not, I mean, this is no surprise for all of us reading the news. The number of cases, which is a leading indicator, and the number of fatalities, which this slide shows, which is a lagging indicator, have been increasing rather rapidly. And that's why you see the South African flag on the slide moving more towards Brazil and some of the European countries, whereas a couple of weeks ago, and certainly in all of the previous editions, we were tracking much closer to the South Korea and Australian, let's say, lines. So this is obviously not a great news, but let's say that on the positive note, we are still in the early days of the development of the disease in South Africa specifically. That's why you see a shorter line connected to the South African flag. So we're hopeful for a better development in the next few weeks and months. This slide is our usual pyramid, which shows and reminds our reader about the fact that this disease it works like an iceberg. The way it works is that a very large proportion of people that have the disease, they contracted either in asymptomatic or mild form, which is both a good news because the mortality is in actual fact very, very low. It's not very, very low, but it's much lower than what we initially thought in January, February, and certainly lower than what many of the media painted it. The bad news, unfortunately, is that there could be roughly anywhere between 120,000 and 210,000 cases in South Africa at the moment, which makes it, that means, just to make it clear, around about 4 every 1,000 people might be infected in a mild or even asymptomatic form, which means that social distancing is absolutely key in this post-lockdown times. One point has to be made about testing. Testing is, as we know from reading the news, super important. And as we explained in the last couple of editions, every country on this metrics typically starts from the bottom left corner. And then as more testing is done, the confidence of the results, so the number of tests per 1,000 people increases. So the countries move upward on this metrics. And as the percentage of positive tests increases, obviously as you find hotspots and as you capture, as the virus also develops in the country, then the percentage positive also increases. Now, obviously here you have two types of trajectories. One trajectory is more sort of the German, Norway trajectory, and another trajectory is the UK, the US. It's not mapped on the slide, but it would be more or less in that position. What we've seen in South Africa is we are still in the early days, And that's why you see South Africa still in the, let's say, close proximity of the left bottom left corner. But unfortunately, South Africa is moving more towards the UK than it is towards Norway and Germany at this point in time. What that means is that as we test more, the percentage positivity of tests is increasing more rapidly than the speed at which we test more people. It's still a lot below the global average, which is roughly 9%, because we are roughly at 5%, but it is increasing fast. One extra point to be made on the virus is, and we're always very clear about what are the known unknowns. And one of the known unknowns that are in our report was about the climate. So a lot of theories have sort of been hypothesized and made on the fact that a warm climate could be a positive driver for the virus, and that it could halt or slow down the spread of the virus. Now, obviously, we need to be wary of the fact that what we're seeing, the developments we're seeing in Brazil, India, and Mexico, and partly also in South Africa, at least partly might counter this argument. So this is definitely on our watch list. Moving on and sort of getting to the typical way we present the situation, which is there are three cases: the best case, the base case, and the worst case. Of course, the daily increases in cases that we've seen to roughly around about 2,000 per day, needless to say, also increase, given that they are a leading indicator, whereas fatalities are a lagging indicator. Of course, also increase the likely number of fatalities by end of August. We try to keep a short forecasting horizon because obviously things are evolving so fast that a large forecasting horizons would be just too imperfect. And that could place fatalities, depending on the scenario, anywhere between 5,000 and 10,000 by end of August. For this time, because we want to give more time to the section about business, we'll skip the policy and the economy part, promising you and all of the readers to deep dive more into it in the next edition, so probably either next week or the week after. But we'll dedicate more time in this particular section about the business part of the presentation. No, actually, I'm wrong. We had one actually comment to be made on the policy and sort of general sentiment in the country, which is a point I wanted to make, and in particular is the fact that the situation is improving. This is actually a questionnaire kindly offered by Ask Africa that we analyze on a weekly basis, and we try and portray the most important statistics. And what we see here is that the level of financial distress and the level of hunger-related distress is still there, but is improving, which is a good, needless to say, a very good sign. What is a bit more worrying is the fact that 45% of South Africans, certainly within the sample interviewed, cannot provide schooling for their children from home. So the schooling issue is absolutely a priority, number one, because without children being able to be schooled, obviously this creates, does nothing but increasing the potential, let's say, inequality and let's say delta impact from the rich vis-a-vis the poor that cannot afford, that either are not connected and cannot afford any other source of private schooling. Okay. Let's maybe skip the previous slide and move exactly into the section 3. So thinking about mining, we wanted, and then I'll hand over to Deshnee, and we'll take some Q&As, which are always the most important and most interesting part of the presentation. But I wanted to give a little bit of a high-level overview of where we are, because given COVID is hitting us now, we tend to forget everything else. Now, if we take a step back and we look at commodity price super cycles, we've had 4 price super cycles in the last 120 years. Typically, they are driven by the industrialization or re-industrialization, if you're thinking about post-war periods, of a big country, of a big economy. In the last case, so in the last one of those cycles, actually, it's been about the industrialization of China and the growth of China. If you look at, and by the way, on the graph on the left, you see the average long-term price changes vis-a-vis the long-term trends. So you see how commodity prices are above trend for a long period of time, and then they go below trend when the cycle turns. As we see, first interesting thing to notice is that even before COVID, the up cycle had already started to turn. And the second important thing to notice is the extent to which global consumption is actually driven and linked to China in terms of commodities. So if you look at the graph on the right side, roughly 50+%, and this is something very known, especially to the mining, let's say, the ones of you that are involved in the mining sector, but 50+% of most commodities are today, most industrial, let's say, industrially related commodities are demanded today from China. And that was materially different from the 90s, which is the light blue bar that you see on the right side of the chart. Now, the first and the important question that this slide needs to raise in our mind is, obviously what this means is that the ability of China to sustain their growth, and which in this particular COVID environment means to put together stimuli for their economy that will keep the economy going at a similar, the same, ideally, and at least similar pace as before, is the absolute #1 driver for commodities in the year to come. If we look at trade war, which again had started already before COVID, obviously that poses an extra challenge to this ability of China keeping up that demand. And if we look obviously at COVID itself, the big question to ask ourselves if we are in the commodity business is whether this is sort of the trigger that will actually sort of change the speed and certainly end this fourth macro super cycle, commodity super cycle. Okay. One last, getting deeper into the South African case, which is what interests us the most. We all know that South Africa is very linked to the mining commodity space. In particular, the top 6 commodities, mining commodities by export, make up for roughly 1/3 of South African export value. That's a chart that you can see on the left side in 2019. And let's look deeper at these commodities one by one, or maybe not one by one, but trying to sort of cluster what are the key needle movers for each one of those commodities going forward. If we think about a super cycle, potentially the Chinese super cycle, Chinese-driven super cycle potentially coming to an end, or at least slowing down. Certainly and I'm talking about chrome, I'm talking about manganese, I'm talking about iron ore. 3 of them are actually massively, obviously driven and connected to the Chinese super cycle. When we look at gold, typically it's actually counter-cyclical, and it's actually more connected to fear. So in a way, gold we should be more optimistic about gold in this phase of the cycle. And then we have 2 more, which are actually a very interesting case. That's coal and platinum, for which the needle mover is actually much more the drivers that are related to moving towards a green economy. Yeah, and specifically when we think about platinum, obviously the more we shift away from catalytic converters that are connected to internal combustion engine cars, the more obviously platinum is put to a threat. And coal is put to a threat mostly by renewables. Okay. One last point in the next slide is in the next one, is where can we find a little bit of hope and a little bit of positivity in the commodity space? I think certainly if we think And if we believe that the big, let's say, China growth engine is likely to slow down in relative terms, certainly the sustainable investing trend, which will drive massively, obviously, the shift and the speed of the shift towards a green economy, which we believe, certainly I believe, will increase in speed in a post-COVID world, will possibly create a new, to begin with, smaller, but a new growth engine, yeah? Which is basically driving a new commodity mix that is more linked to the future and to a green economy, which we've seen before COVID, just like many other trends, which we started seeing before COVID. And here on this slide, we're mentioning a few of the key commodities that are, needless to say, positively influenced by this. One is lithium, one is copper, one is nickel, graphite, and cobalt. These are just some of the examples. So I'll leave to Deshnee after this food for thought, so that she can maybe shed a little bit of light on the business perspectives in mining South Africa.
Deshnee, thank you, Lorenzo. And I thought before we talk about business specific, I'll talk a little bit about the overview of the mining industry, numbers that Lorenzo did touch on as well. I think in terms of a snapshot, in fact, active mines today are over 380 mines across South Africa. We employ directly and indirectly over 450,000 people. I think we all understand that mining specifically has a significant multiplier impact. GDP in 2018-2019, close to 8%. And I think more specifically, in terms of fixed direct investment, mining was just under 100 billion rands, and a third of South Africa's export earnings, that's close to 350 billion rands. And in terms of taxes, both direct and indirect, mining contributes about 50 billion. So that's quite significant. Yet, as indicated on the slide, mining has been in structural decline over the last decade, with us losing about 10% of output, 50,000 jobs, and 45% decline in capital, including a decline in overall exploration. Many of you would wonder why is that, and we can have this more in the Q&A. But simply put, South Africa does have issues with the regulatory uncertainty, policy uncertainty as well as logistical bottlenecks. And more especially over the last decade, we have seen an increasing cost. It's not a regret, but it is an increasing cost in terms of license to operate. So if we look at how the mining industry has responded since the start of the COVID pandemic, as early as February, I think firstly I want to say that mining is probably more geared than most of the industries to address COVID in terms of both the environment as well as people, because of the nature of mining. Mining is a very hazardous industry, and in terms of adapting both the workplace as well as the people practices to mitigate, manage, and prevent COVID-19 is a little easier, or was a little easier for us to do. The Minerals Council, which is the industry body in which most of the mining companies are members of, actually took to action in February already through the Health Policy Committee, where we issued both guidelines as well as education material on COVID-19. But before the harsh lockdown that South Africa instituted on the 26th of March, the Minerals Council already had a 10-point action plan, as well as a standard operating procedure in terms of what the mining companies, as a minimum, should be doing. The guidelines of what was in the SOP actually then formed, what the government gazetted in terms of a COP, which is a code of practice, on the 18th of March. Just to touch very briefly in terms of the risk-based intervention approach that was adopted across mining. It was, we started off doing the risk assessments on both the environment as well as on people. And on the people side, looking at people that were most vulnerable in terms of comorbidities. And then on the management of cases, looking at the screening procedures we had to put in place, as well as testing linked to that, tracking, tracing, looking at isolation as well as quarantine. We also looked at how can we collaborate within the industry, both with other mines as well as with the health industry. From an effectiveness point of view, I think Lorenzo touched on the overall South African numbers. Just to put mining into context, I think we've screened over 230,000 people. We have today tested over 700 or 7,700 people, and in terms of active cases, 572. If I look at active cases in terms of test positivity, mining therefore has about a 7.5% test positivity. And if you look at the rest of the South African industry, last week it was 4%, this week 5%. Yes, mining, like the rest of South Africa, has to test more. I think the big takeaway here is that the controls in place are working because we are testing adequately. The next slide, please, Rohit. You can keep it here. I think I just want to mention, when I look at that slide, it does look at, opportunities as well. In the short term, I think mining, like most of the rest of the South African industries, are going to be very heavy hit. And it is time for some relief, either in the form of tax, royalties, and levies. And it also may be an opportunity for us to gain access into some of the provisions that the miners have kept in the form of rehabilitation funds or SLP. It is important that we look for avenues outside of the mining industry, specifically in terms of enhancing liquidity. We've often heard this expression of not letting a crisis go to waste. And I think the point there on medium-term structural reforms, there's a reason that mining's been in decline in the last decade, and we should seize that opportunity to try and look at how we can, from a medium-term perspective, put more structural reforms on the table today. Okay, next slide, please, Rohit. What I've got there in terms of resilient proofing, I know it's very exhaustive. I'm not going to go through all of the bullet points. This is from my collective experience over the last 20 odd years, as well as from lessons I've learned from some of the other crises, in terms of firstly, how to actually resilient proof your business so that you can respond faster during a crisis. I'm just going to touch on some of the elements listed there. I think first and foremost, and Lorenzo touched on it as well, ESG has to be firmly entrenched in any business, in any mining business today. It is no longer the voluntary principles that we all subscribe to. It is the way we need to do business. Secondly, you have to have the right team in place. Their accountabilities must be clear, but more so, I think it's time for leadership teams to now be paid more variable, in terms of rem and reward towards outcome-based, and I'll come back to that in a little bit. In terms of operating model, I think gone are the days where we've got these massive corporate offices. Today it's all about lean corporate structures and keeping the action in terms of decision-making as well as people as close to the ground as possible. You need to have a shared roadmap or vision that has buy-in from all of your stakeholders. And I think that's important. Gone are the days where we talk about, return to shareholders. This is all about how do we take all affected stakeholders along. The other point to touch on there is mining companies need to design to be 100% variable cost business. If you come short of that, that's still going to be good enough. I built a project in the Northern Cape in South Africa 3 years ago. That operation was set up to be 80% variable. And of course, if you're a variable run organization, it's far easier to stop cost, than to restructure to do that. The other point there is you've got to be a high performing organization in terms of, deliver what you put on the table. I call that the plan compliance, and all mining companies today should be at least a 95% plus plan compliance to their set targets. Agile project execution, it's always done on the fly and in parallel to the normal work. And structured investment in technology is incredibly important. Pick the technology that's going to help you navigate or make easier what you can't do today. Coming back to the stakeholder and the communication point, something I can't stress enough is how important it is that under the normal course of business, for you to have a robust stakeholder engagement plan, making sure that not only are you engaging, but you do get a sense of the pulse on the ground in terms of what is happening. With that in mind, in terms of what I kind of call this the playbook that I've conceived over the years, is what then do you do during a crisis, which I call the survival stage. I think first and foremost, it's to define what the crisis is and the likely impact to the various scenarios. To conceive that, you have to take into account the macro environment, the markets, as Lorenzo mentioned, supply, demand, supply chain, etc. But the focus there is make sure that you are planning for success on the worst case scenario. Then set up, and as many of my colleagues across the industry has done, set up a CEO-led crises committee. I think similarly, and the reason for that is to give some structure in the chaos that is going around and to make sure that we are learning in an evolutionary way in terms of how to navigate through that. But equally important at that stage is to put your arms around talent as well as certain business partners to make sure that people that you need to weather this through you are in fact engaged and are willing to do so. I cannot stress how important it is to make sure that during a crisis in mining, that health and safety is increased in terms of focus during this period, not necessarily because we're in a health crisis now, because during a crisis, people are more distracted than usual, and you want to make sure that your systems are keeping people safe. Also, showing care in terms of health and safety is very much an ingredient for weathering through the crisis. I've mentioned communication plan, again, something I'd like to speak a little bit more about in the Q&A. But I think equally important is when we talk communication and engagement, we're talking two-way to make sure that stakeholders, both your employees and your business partners, unions, community members, etc., are not just spoken to, but you're listening to them in terms of what the issues are. You're putting problems to them so that they can help solve. And by doing that, you're making sure that the crisis is not the CEO's solution to solve alone, that it has the collective ownership and buy-in from the rest of the organization, that we all are in this together and we all need to get out of this together. Cash preservation. Again, against that worst case scenario, look at what I call now the hierarchy of cost saving and cost containment. Is what is that way of looking at how do you preserve cash? I look at firstly working capital, procurement, looking at what are the core and non-core activities stopping, what are mandatory discretionary activities, stopping them, not necessarily stopping, but deferring certain production activities that can be looked at later on. You then go after your variable cost of people, and it's only after that do you go after fixed cost in terms of restructuring or reorganization. Equally important is to look at what sort of short-term reliefs you can get through advocacy, and this comes back to taxes, levies, etc. You either ask for a relief or a holiday, and if not, you ask for a deferment. The key in that surviving the crisis phase is that nothing is sacred. Nothing is off the table. You ask for everything that you can do to try and get the businesses to survive in terms of cash preservation. The last, which is very much a mirror of the survival column, is once you have the visibility of I can, in the worst case scenario, create a buffer on cash, is how then do I adapt the business to looking at this as the new normal. And if you're smart enough, and I think this is something that all CEOs should be looking at this, is how do we accelerate the survival so that we can be quickest to adapt and thrive, and in doing that, differentiate yourselves. Simply there, and again, we'll touch on a couple of those points, reintroduce in a phased manner some of the initiatives that you've temporarily stopped. I think it's so easy to say, just don't do it. You know what, I'm in a crisis. I can only focus on the top 5 things. You've got to divide the organization to make sure some of the longer term ESG initiatives and other sustainable initiatives are in fact still being followed through once you have this visibility. Reassess the leadership team. It's all about team. The team that runs a steady state business is not necessarily the same team that can help you through a crisis, and might not be the same team that can then help you through the crises and adapt and thrive. So reassess, make sure you have the right team supporting you. Create the case for change. And this is not the case for change to survive. This is the case for change to enhance your resilience, because the business and the macro environment is yet to suffer more shocks, and to make sure that you have an even bigger buffer. In terms of that case for change, I think it's important that once the plan is in play, that it is roadshowed across the organization, both internally and externally, so that you do get stakeholder buy-in. That's incredibly important, so that people understand the why. What I found works best is when, again, you make or you create the ownership, so people understand what's in it for them. Similarly, coming back to the importance of communication, you then align or realign the communication plan to this case for change. The crisis committee that you would have set up in the crisis or the survival phase, it should now be brought down to a light touch, but focus on an RDO or transformation office, whatever you want to call it. But the CEO needs visibility in terms of how the company is tracking against the initiatives in place now to adapt and thrive, to monitor, measure, and to course correct. Because of course we've got to be agile and flexible in this phase. This is also the period, and I want to see more mining companies move towards this sooner. This is also the period to invest in the future. Not only is it the right and the smart thing to do in terms of not only future-proofing your future business, but in also differentiating yourself, is to pick on the right technology, digitalization, and R&D initiatives in a product, but will also set you up for the future. Cash is going to be incredibly scarce in this period, and I would actually suggest that we look at partnering in this phase to make sure that these initiatives happen. And lastly, I think as much as in survival you look for short-term relief, when you are in the phase of adapting and thriving through industry, again, with the government and other stakeholders, you should look at how do we once and for all adapt or adjust this industry so that we can survive through this, as opposed to having another crisis where we've got to downscale. And that could be in the form of regulatory reforms in South Africa, specifically looking at power and logistics in terms of how that space can be made more competitive. I think key, because mining is a long-term game. It's got, it is a cycle in which you've got to invest a lot upfront. I think the country is not doing enough in exploration, and an opportunity, I think, for this industry at this time could be how do we open up the exploration space a bit more. So quite a busy slide, but I was quite determined with Lorenzo and Rohit to make sure that we did show what was as important in a business as usual environment to help you survive through the crisis, and then use the opportunity to adapt quicker than your peers and set up for the future. Thank you, Lorenzo and Rohit. Back to you.
Thanks a lot. Thanks a lot, Deshnee. That was great. Rohit, if you don't mind moving on to the next slide. So just a couple of words of recap. I mean, this is very much the framework that we've been sort of presenting and referring to over the last couple of editions. I mean, the interesting part is that, and I mean, I'm not going to explain the framework again, which we've been through, but I think what I wanted to provide you with is a little bit of a few hints of what I've observed is a bit more difficult to get right at big organizations. So if you look at phase one, the dynamic shock assessment, so there typically the particular points of attention are, how do I set myself up in an environment that changes so frequently and so much in a way that I track certain key indicators that are important for my industry and therefore for my business without keeping half of the team busy on it and half of the organization busy on it. Because of course, at the same time, you need to execute on your normal day-to-day strategy, which is going to be ever more complicated to execute on in an environment like this. So this is really where the sort of the science becomes art, so to speak, which is really to choose the few critical KPIs and areas of the environment that you decide to scan on an ongoing basis, and then an internal team does that on an ongoing basis and relates to the strategy team so the decision can be taken on that basis. This it proves typically to be particularly difficult to do. When it comes to the strategy adaptation, what proves particularly difficult to do is that organizations tend to think a little bit, or excos tend to think a little bit one-directionally, in the sense that either an organization feels completely in a state of crisis, and therefore all of the initiatives are sort of are going towards the direction of reducing the risk, reducing exposure, hoarding cash, and so on and so forth. Now, the problem is that typically what works best is to be able to work in these two-gear setup, whereby some parts of the organization are working on defensive moves and some part of the organization are working at the same time on either aggressive moves or preparing the aggressive moves that will need to be implemented in the months to come, based on the reaching of a certain internal milestone that one has decided. On the phase 3, which is very much the implementation of what we call and defined in the previous editions, the SWAT teams, these transversal teams that take care of the strategic initiatives that the organization has decided that they want to put in place to adapt, to pivot, and be able to survive and thrive in the crisis. What's difficult there is that it's very hard to find the right balance, the right equilibrium between having these SWAT teams sitting in the ivory tower in the corporate center, which of course doesn't work, because then the organization is not implementing, is not following, is actually rejecting and is working as an antibody towards what these teams are trying to push through the organization. And on the other hand, also the opposite cannot happen, which is that the CEO sets up the agenda for the SWAT teams and then disappears and thinks about something else, expecting that the execution is happening throughout the organization at the same time. So neither of these two approaches work. So a fine balance needs to be found. So if we move to the next slide, a couple of tips on what we learned from the past, specifically from the Great Recession, which I think has a lot of similarities to this crisis, also a lot of differences, but a lot of similarities, because it's the closest, at least in terms of the complexity of this ecosystem around us. So there's three characteristics in particular that we've really distinctively noticed. If we look at the companies that made it in the best possible shape out of the crisis. The first characteristic is being responsive. I don't know if you're a chess player, but when you talk about, for instance, the pawn sacrifice, there are sacrifices that need to be made in the short term to be able to ensure that you have enough of a leeway, enough of a runway to adapt for the new environment, which leads me to the second characteristic, which is about scanning the environment and adapting quickly. I mean, some of the consumer behaviors that we see and the business behaviors that we see changing now are obviously temporary. I mean, we will not live with the coronavirus forever. We will, hopefully, we will not live in a in a pandemic forever. So some of the behaviors are there only for the short term, but some of the behaviors are there to stay. And some of those behaviors were actually there already from the past. I mean, if you think about the tendency of buying online, if you think about the trend of smart working, if you think about online banking, all of these things were already there. This will just increase the speed at which these changes will happen. So if you, as an organization, are not taking this as an extremely urgent sort of call for action to adapt and jump on these trains, and in the mining space, we spoke very much about the moving towards a green economy and all the and the importance of ESG and all of the implications that these two mega trends have on each and every mining business. Then it's going to be very, very hard to make it to make it out of this crisis in a good shape. The third one is thinking in ecosystems. As complexity increases, and think about the mining sector, which is the one we are mostly focusing on in this presentation. As complexity increases, you cannot possibly keep all of the fields of knowledge internally, and we've seen that in many other industries. We've seen that in oil and gas. We've seen that in many of the most hit industries in the financial crisis. The complexity of technology and automation, the degree of complexity that you have in mining, make it such that most likely you will, if you want to be the fastest and if you want to be the best one and the one adapting the best, you need to be absolutely relying on external parties and ecosystems that allow you and teach you to change quickly. Okay, so I think I would leave it there, and actually we're already probably running a little bit late and cutting into the Q&A, but let's maybe leave it. I don't know if Gary, you're still there and you're happy to read a little bit of the Q&As, or if you should I?
Lorenzo, I think you can go ahead, or perhaps we should, ask any of the attendees for any questions that they have. I'll just ask one, perhaps to Deshnee.
Yeah, please. Go ahead.
Deshnee, what can the mining industry take forward and actually start adapting and using from this COVID-19 crisis?
I think on the ground, Gary, that will be increased health controls. The mining industry has always been leading in terms of, if you look at how we've responded to TB, how we've responded to AIDS and HIV. We've basically adapted such that the rest of the work environments make sure that people are kept, that they're kept safe. So I think from a health perspective, we definitely can take away increased controls. The social distancing, I think, poses a natural constraint to how mining is done. I think that would change the way we work. That's more on the management side. So if we can keep people at home and working, I think the mining industry will definitely do that. I think what the lesson learned and what we can definitely take forward here is changing the way we work entirely. Okay, so that's on the physical side, and then as we said, we are going to go through a slump. So the mining industry mustn't waste the opportunity of trying to modernize in an accelerated way. So if we want to work safer, make social distancing the way we work, I think from an engineering point of view, embracing modernization is the way to go. And then, the last point, and I made it earlier, but just so that we never miss this opportunity, is once we keep people safe and we have a clear path in terms of how we can make mining safer and more adaptable, we have to focus on some of the structural reforms in terms of regulation, certainty, logistics, power, etc., so that once and for all, we're not as rocked going forward with yet another crisis. I think the opportunity of sorting some of the structural reforms is something that we must do.
Sure. There's a question from Anonymous. Back to you, Deshnee. What can miners do to shift demand away from China? That's a question that's been posed.
And that's an amazing question, Anonymous. And I think it's simply, you know, South Africa needs the demand for these raw materials into metals for its own use, if it is to grow the economy to the levels that not only it can, but this country desperately needs right now. So what we should be doing as a country, and then what mining can do, is to look at how can we beneficiate a lot of the metals that we send in either concentrate form or in raw form more in this country, and use that to grow the GDP of this country. That is not such a quick solution, but something that we're already talking about is how do we create more competition in terms of power and infrastructure now, so that we can enable more private sector players within the space to allow downstream beneficiation and industrialization to happen. That's what mining can do.
Yeah. Lorenzo, perhaps a question to you. You're a turnaround specialist. Have you identified any particular mining houses that perhaps are struggling, and how, or what advice you've got for them to turn it around?
Yeah, I mean, unfortunately, look, there's a lot of the miners in commodities that are not gold, basically, and very few others, I think, will be, to the degree of which they entered this period with a weak or medium balance sheet and cash flow, they will face a tough time. So there's not going to be a scarcity, just like in any other sectors. The only extra difficulty in mining is that it has a bigger, let's say, a fixed cost component than many other sectors that are a little bit more variable. But other than that, you will find plenty, and you're seeing plenty players struggling. I mean, what to do, I think, is the usual mix of tools, whereby you need to assess at first what can you realistically do, and continue to reassess that, because we don't know how long this could last. And when I say this, I mean not only the virus, but especially the economic consequences of the virus, which are much more complex to foresee and forecast, because many more variables are in between, including policy, global demand, local demand, the interaction between the two, stimuli, etc., etc., etc. So you need to continuously, so be conservative at the beginning, cut what you can that is not hurtful. And obviously, I mean, this typically for any organization means do whatever you can to not hurt your people and the families. And obviously, in some cases, when you have to restructure, but there is a lot you can do before that happens. So that would be the absolute first step. And one thing actually to note on this first step, it's actually something where government can also help. If you think about the European countries that managed to preserve employment the most at the end of the last recession, are the ones where legislation allowed short-term work and variabilization of workforce, so that basically nobody fired. Yes, salaries got decreased because the amount of work needed was less, but basically the speed at which employment, then basically nobody got fired, or barely anybody in relative terms vis-a-vis other countries like the US, and then the pickup was a lot faster. So there's also something that governments can do from a regulation standpoint in this respect. If you are amongst the few, and there are quite a few, in a lucky position of having a strong balance sheet, obviously, needless to say, this is the absolute best time, probably in a generation, to do acquisitions. So if you're thinking about the big engine of China is slowing down potentially, or at least is not growing it's not going to be growing as fast at the same speed and or as fast as it was before. But there is another new engine, which is the one that we spoke about. Let's call it a green economy engine, which changes the commodity mix. That's where I would look for acquisitions. Exploration companies will be struggling to raise money, of course, in this kind of environment, because they don't have a constant flow of cash, and therefore there will be excellent opportunity for acquisitions, for not only in the exploration space but also in the mid-size and distressed space.
Sure, Deshnee, I don't know if you've read the comment in the panelist section posed by Julian Willem. If not, I'll read it.
Sure.
Can Deshnee comment more on a reliable energy supply for the industry, enhancing infrastructure, i.e. railway lines, getting labour to modernise mining, i.e. mechanisation? Is the current charter suitable in its current form? How does South Africa get investment into its exploration portfolio?
Okay. It's a mouthful. I think we'll start off with the charter. I think one of the things I said, this is the time, to write, the issues that we've had with the regulation over the years. So start there. When I talk about more reliable energy and infra, what I'm saying is, today over 40% of the of South Africa's infrastructure sits with government in terms of, state-owned enterprises. I'm saying, and again, these are thoughts. I've had some of these discussions in the industry. I'm saying, can we please open up the space so that we can attract more private sector investment to compete with the SOEs who are already trying or who are already in turnaround. So that's the plan. But in the interim, because we need reliability of both power as well as infrastructure to make sure that mining can be competitive today, is to look at how the mining industry can possibly assist some of these SOEs with just maintaining current capacity, current infrastructure. There is balance there in that short to medium term solution. But this is going to be key if we're going to produce or beneficiate for ourselves. This is at the crux of the solution we need.
Okay, Deshnee, I think you touched on most of that. I think we'll take the last two questions, if you don't mind. Go a little bit over 4 o'clock, if you can, Deshnee, if you're able to. We've got a question from Rukesh Raghubir. We've noticed a common theme from our mining clients who are delaying capital expenditure and SIB spend in the short term due to the uncertainty of COVID-19. These projects take 12 months or more to implement. Our country needs the mining fraternity to preserve and or create jobs. What can we, MND Construction, do as infrastructure specialists to assist the mining companies to ensure these projects are not delayed when they are needed most?
So I know Rukesh very well. Rukesh, you can come.
I'm glad I don't have to answer this one.
I think, Rukesh, I mean, you've got a very particular and a very niche offering in terms of, the infra side to any big mining or construction project. I would think it's now opportunity, knowing which mining company had which project in its pipeline, to go and structure something innovative in terms of a partnership on how some of this work can be done on a more risk-based model. Because I remember building a project in Hamsburg, which you supported us on during a downturn. It's a really good opportunity to get the civils done for projects in this period, when, as we know, the skills are available, material could be more available. Think of innovative solutions for partnerships on how work can be done in this period and risk. I think it's also very important to get the financial institutions on board as well, and to make sure that they can finance more at risk as well. This has been difficult over the last couple of crises or downturns I've faced, in that the banks in South Africa are not doing enough to support these projects now. I think someone like you who has a good track record can certainly convince some of these banks to part with money so that you can do some of these projects at risk.
Thanks, Deshnee. Just one more before we close up. Lucia Bonga Madondo. In terms of logistics, does the industry have the ability to reduce logistics costs and turnaround time, or is the industry to continue to rely on Transnet to get their house in order? Transient. Sorry, I apologize. Transient.
Transnet.
Transnet.
It's Transnet. Yeah, Transnet. I think in the short term, the industry is relying on Transnet. So what we need is for Transnet to be more efficient so that it can offer a more competitive service. But in parallel, yes, the industry has to build its capacity for infra. Again, this can be done with DFIs and other support, for funding. But if mining wants to be successful, we can't continue to put all our eggs into the baskets of the country's SOEs. we have to develop some of this capacity ourselves. So help Transnet become more efficient, and there's a lot that can be done collectively, and then work on a model with government, no time like during a crisis, to look at how the space can be opened to be more competitive to attract private sector investment. Thank you, Siyabonga.
Yeah, I think it's just after 4 o'clock. We'll wrap it up, Deshnee and Lorenzo. Please join us every day. We have webinars where we talk about a number of different sectors. Monday, we've got Nikki Bush at 10 o'clock. She's coming in to talk about keeping your business running while working remotely. This is going to be an interesting topic for everyone. Many people have been working from their homes during COVID-19. She's going to give you some very interesting tips. And next Thursday, the 11th of June, don't miss out, Gigi Alcock, the author of Casinomics. He's going to talk about the informal sector and what is the impact of COVID-19 had on that particular sector. So please join us. If you have any more questions for Deshnee and perhaps Lorenzo, please email us on info@cobra.org.za, and I'm sure they'll answer all your questions. Until Monday, cheers, everyone.
Excellent. Thanks, Gary. Thanks, Deshnee. Thank you, everybody. Have a good weekend.
Thank you. Stay safe.